Good day, learners. Welcome to Study Section 2, Regulatory Framework of Auditing. In our last section, we actually introduced ourselves to Auditing and Assurance Services 1. You could recall what audits is all about. Aside from that, we also tried to see the various classes of audits. We were able to look at historical development of audits, and of course, more importantly, is the objective of audits, which is categorized into primary and secondary objectives. And of course, finally, we were able to see advantages and disadvantages accruable to auditing. We're going to be talking about regulatory framework of auditing. At the end of this study section 2, you should be able to understand the legal framework of auditing as well as the professional framework that has to do with auditing. Legal framework of auditing. Auditing is not done in isolation. It's a business that's regulated. It is an act that is regulated. It is a function that is guided by laws and processes. The legal framework represents all enabling laws, acts of parliament, judicial pronouncements, which guide and has impact on the audit, the auditor, and the audit engagement. The contravention of these laws is actionable in the court of law. In Nigeria, these laws, among others, include Companies and Allied Matters Act, the Institute of Chartered Accountants of Nigerian Act 1965, the Central Bank of Nigerian Act, Securities and Exchange Act, Nigerian Stock Exchange Regulations, Insurance Act, Independent Corrupt Practices Commission Act, Economic and Financial Crime Commission Acts, Financial Regulations as amended, and of course, for public sector, Civil Service Reform Acts, and as well as Audit Acts. But among all these acts or these laws that I've listed, we are going to be talking about the Companies and Allied Matters Acts being an overriding law that has effects on audits. But let me quickly give a caveat here. In other words, we are going to be talking about statutory audits. Most audits are statutory. Of course, just like I said in the last study section, there are also private audits. So let us look at the provisions, some of the provisions of the Companies and Allied Matters Act, shortened to KAMA, and how they affect the audit engagement. The first one is the appointment of auditors, and that is section 357. It is provided that every company shall at each annual general meeting appoint an auditor or auditors to audit the finances of the company. And of course, the tenure of the auditor shall run from the conclusion of the AGM where he or she was appointed till the next AGM. So we must note that the tenure of an auditor runs from one AGM to the other, and not a calendar year, as it were. In the following circumstances, the director may also appoint auditors. Prior to this, let me also state that usually, just like I said in section 357 subsection 1, an auditor being appointed at the AGM is to mean that an auditor is actually appointed by members naturally. However, there are some instances where directors may also appoint auditors, and some of these are where at an annual general meeting no auditors were appointed or reappointed, or the appointment of the first auditor, and of course to fill any casual vacancy. However, we must note that in the appointment or the reappointment of a retiring auditor, however appointed, he is also qualified to be reappointed unless he is not qualified for reappointment, or a resolution has been passed at the meeting appointing some other person instead of him or her, or he has given the company's notice in writing of his unwillingness to be reappointed, and that has to do with the appointment of auditors. Aside from that, section 358 is on qualification of auditors. Who can be auditors, or specifically who can be company's auditor and who cannot. Let me first of all state that instead of this particular section stating specifically the qualifications, the disqualified groups, that is what was stated, what is actually stated in this section are the disqualified group, that is who are not allowed, the people that are not allowed to serve as an auditor to companies, and these are an officer or servant of a company, a person who is a partner or in the employment of an officer or servant of a company, a person or firm who or which offer to the company professional advisor in a consultancy capacity in respect of secretarial, taxation, or financial management. And of course, finally, a body corporate is disallowed to act or to be engaged as a company auditor. The next section, section 359, talk on the reports of the auditor. The auditors, under this section, the auditors of a company is required to make a report to its members or shareholders on the account examined by them, and on every statement of financial position and all group financial statements, copies of which are to be laid before the company in a general meeting during the auditor's tenure of office. Of course, the audit reports are expected to address matters as stated in the 6th schedule, which we are going to be talking about when we get to the audit reports. In addition to this, for a company that is a public limited liability company, in addition to the audit report that is prepared and sent or that is given to members, the auditor is also supposed to report to audit committees, who then write their own reports on the audit activities during the year. The committee shall consist of an equal number of directors and representatives of shareholders of a company, subject to a number of 6, to a maximum number of 6, and they shall examine the audit reports and make recommendation thereon to the annual general meeting as they deem fit. In addition, we have the remuneration of the auditor, and that is section 361. This section provides that the remuneration of an auditor of a company, in the case of that which is appointed by the director, may be fixed by directors and or may be fixed by the company in annual general meeting, or in such a manner as the company in general meeting may determine. That is to the effect that he who appoints fixed the remuneration, as it were. But in most cases, even when they have been appointed in an annual general meeting, they are usually they usually pass the resolution and empower the directors to go and fix their remuneration. However, it is worthy of note that remuneration includes sums paid by the company in respect of the auditor's expenses. Section 362, in terms of the removal of the auditor. Well, an auditor may be removed from office by an ordinary resolution before the expiration of his term of office, notwithstanding anything in any agreement between him and the company. However, what is required is a special notice of not less than 28 days before such can be valid. Where a resolution removing an auditor is passed at a general meeting of a company, the company is also required to give notice within 14 days of that fact in the prescribed form to the Corporate Affairs Commission, to that effect that they are removing that. And on receipt of such notice of such an intended resolution of the above, the company shall forthwith a copy of it to the person to be appointed or removed, as the case may be, the retiring auditor, who is the person that is about to be removed, and of course, in the case of any resolution. What is usually required here is that the auditor is not just removed anyhow. There are processes that are supposed to be followed before an auditor is removed, because sometimes management may be funny where the auditor does not play to their side and they want to remove such an auditor. What is required here, in addition to even these provisions of the law, removal of an auditor under the professional requirements also is something that is very, very important. Both the retiring auditor and of course the about to be appointed auditor, they have to communicate, and in the communication they have to seek for approval from the company, and if company renege, the incoming auditor may also want to know why that is happening, and that is the whole essence of the removal of an auditor under section 362. Of course, there are some rights that are being conferred by the law on the auditor by virtue of section 363. He is entitled to attend any general meeting of the company and to receive all notice and other communications relating to any general meeting which a member of the company is entitled to receive. And of course, he also has the right to be heard at any general meeting which they attend, or any part of the meeting any part of the business of a meeting which concerns them as an auditor. That is very, very important in most cases. In other words, as an auditor, he has the right to receive notices of any meetings, especially that which concerns him. And of course, he has the right to be heard, especially on matters that actually concern him, which ordinarily is also agreeable to an ordinary member. Of course, under section 364, these are instances where special notices are required with respect to things that concerns the auditor. This section listed instances where special notices are required for resolution at an annual general meeting. And part of among those times that special notices are required, in the appointment of an auditor other than a retiring auditor, a special notice is required. In the filling of a casual vacancy in the office of the auditor, a special notice is also required. In the reappointment of an auditor, in reappointing as auditor a retiring auditor who was appointed by directors to fill a casual vacancy, of course, a special notice is also required. That is, where initially it was directors that did the appointment, and then this time around, the auditor, the general meeting, the annual general meeting is being convened. The process is such that they want to confirm, or they feel that the person who was appointed by director can also go on as an auditor. And of course, in the removal of an auditor before the expiration of his term of office, there is also required a special notice that is supposed to be done. Finally, resignation of an auditor is actually addressed under section 365. Of course, an auditor can be removed. In the same vein, an auditor too can decide to resign. Section 365 is to that effect, is addressing that. An auditor of a company may resign his office by depositing a notice in writing to that effect at the company's registered office, and any such notice shall operate to bring his term of office to an end, the dates of which the notice is deposited, or on such later dates as may be specified on it. But however, such notice of resignation by the auditor shall not be effective unless it contains the following: 1. A statement of circumstance connected with his resignation, which he considers should be brought to the notice of the members or creditors. And of course, if there are no circumstances, the auditor must also state that. And where a notice under this particular section is being deposited at registered office, the company shall within 14 days send a copy of the notice to the commission, that is the Corporate Affairs Commission, and of course to those who are supposed to receive any other notice of annual general meeting. The company shall within 14 days of the court's decision, that is, most times it is possible that the auditor is seeking needless publicity, and in that case the company may also file to court that such statement of circumstances may not be circulated. And that is why the company may within 14 days of the court decision send to the person mentioned in the section that an order has been made to that effect. And that is actually what happens when we are talking about the resignation of an auditor. Having seen the legal requirements under the CAMA, let us also talk about the professional framework, that is in terms of standards that we look at. You know, I told you that an audit is a business that is being governed by both legal and also professional framework, and in which case we are going to be referring or talking about standards that are seen as best global practices. Auditing, of course, is ruminating or is a particular discipline that is operating within the larger accounting discipline or accounting profession. So the profession is also self-regulated by way of pronouncement of standards. Just as we have accounting standards, we also have auditing standards. And these standards are propounded, or they are pronounced. They are pronouncements by authorities, professional bodies, which are supposed to be followed during audit engagements. And this standard, as it were, we have International Standard on Auditing, ISAs. Of course, these are standards that are actually being issued by the International Auditing and Assurance Standard Board, which is a board under the IFAC, International Federation of Accountants. Of course, the ISA is actually a 3-digit thing, and as it were, in Nigeria, we have the Nigerian Standards on Auditing. auditing that is being issued or done by the Nigerian Auditing Standard Committee. Being as it may, it is the Financial Reporting Council that does standards now, but sometimes they collaborate with local bodies such as ICANN to do this. Aside from that, and let me also say this, that the International Standard on Auditing is actually supposed to be complied with whenever an audit is being conducted anytime. Aside from that, there is international standard on review engagement, and that has to do with anytime that an accountant or an auditor is being engaged for any review engagements. And this standard, so to speak, is actually applicable. And there is international standards on assurance engagements, and of course these are applicable to all other assurance engagements aside from historical financial statement, which is the purview of ISAs, and of course review of historical financial information, which is within the purview of the International Standard on Review Engagement. Aside from that, there is the International Standard on Related Services, which are actually applicable with other audit related services other than that which is being mentioned. Review, good examples are agreed upon procedures or compilation. And of course, there is international standard on quality control, and that is applicable whenever an audit or even non-audit related or non-assurance engagement related is being engaged upon. Thank you very much. Also, there is the fundamental principles of auditing, and this actually speaks or talk about the ethics and the ethical standards, and one of which there are many. They are independence, and auditors should be seen to be independent, and of course independence is a state of being free from stands at the roots of audit function. Again, there is objectivity, and an auditor should be seen to be objective and of high integrity. Aside from that, there is confidentiality, where an auditor is supposed to be confidential in whatever document that comes to his information or to his purview in the course of the audit engagement. And an auditor also should conduct himself with due diligence and skill and competence. Very, very important. A very good concept is also the concept of true and fair. And of course, it is very, very important that the concepts has to be complied with. True and fair concepts has not in any way been defined anywhere, but what it does mean is as stated in the audit report, which we are going to be addressing later in the course of the lecture, later in the at another study section. In accordance with paragraph 3, subsection 2 of the schedule to the 6th of the schedule 6 to the CABA, auditors are expected to state in their report whether the finance statement they have audited give a true and fair view. Thanks for listening.